Did you know there's a quiet deadline coming that could quietly erase money the government owes you? A deadline that decides whether hundreds or even thousands of pounds land in your account or vanish without a trace. We're talking about 5 separate payments that millions of pensioners are entitled to right now but simply aren't receiving. And the reason almost nobody claims them is because nobody in the system has to tell you they exist. But there's a twist. Of everyone watching, only one group of pensioners gets to keep every single penny of this money. Everyone else loses at least part of it the moment the July window closes. The difference between walking away with everything and letting it slip through your fingers comes down to one thing you can sort out this week, and I'm going to show you exactly what that is. If you've reached state pension age, the Department for Work and Pensions is holding money right now that has your name on it. But before the first week of July, a chunk of that money disappears for good. Once that window closes, there is no appeal, no late application, no letter you can write that brings those weeks back. The money simply stops existing as something you are owed. But before we go any further, I need to ask you something directly. If this information helps you or could help someone you care about, please hit the like button now. It tells YouTube to share this with more people who genuinely need to hear it. And if you haven't subscribed yet, join this community now so you never let money slip away again. I bring you clear, actionable information every week that most people never discover until it's too late. Share this video with one person you think might need it. That one share could put real money back in their pocket. Thank you. Let's get started. Now, I have spent a long time looking at how this system actually works in practice rather than how it is supposed to work on paper. And the gap between those two things, the promise and the reality, is where all of this money goes missing. The rules are not hidden. They are published, they are official, they are sitting on the government website right now for anyone to read. The problem is that nobody reads them until something goes wrong. And by then, the window that would have recovered the money has very often already closed. What I want to do today is put you firmly on the right side of that window while there is still time to act. There is one rule that ties all 5 of these payments together, and once you understand it, everything else in this video becomes crystal clear. Almost every benefit in the British retirement system can be backdated. That means when you finally claim it, the DWP doesn't just start paying you from today. They pay you for the weeks you should have been receiving it already, going back up to 3 months from the date your claim lands. That 3-month window is the whole game. The new financial year began on the 6th of April with every payment upgraded to its new higher rate. Right now, the April start date is still inside the 3-month window. A claim made today reaches back and recovers every single week since April. But the moment we move into August, the early weeks of April start dropping out of that window one at a time. And every week that falls out is a week of money you can never recover. That is why the first week of July is the line in the sand. A claim that lands before it captures everything going right back to April. A claim that lands even a few weeks later starts shedding those early weeks. And the losses build quietly from there, week after week, with nobody at the DWP warning you that the clock has already started counting against you. It is worth understanding just how much money we are talking about here, because this is not a matter of a few pounds. For someone newly entitled to the full pension credit top-up, 3 months of backdated payments can run well into the hundreds of pounds, arriving as a single lump sum. And that is before you add the other payments stacked on top of it. The window is genuinely valuable, and it is closing in real time as you watch. So let me take you through the groups, because this is where it gets personal, and this is where you need to work out which one you are in. Payment number 1 is pension credit, and it is the single most important one on this entire list, because it is the master key that unlocks almost everything else. Pension credit tops up the weekly income of the poorest pensioners to a guaranteed minimum. In the current financial year, that guarantee is £238 a week for a single pensioner and £363 and 25 pence for a couple. If your weekly income falls below those figures, the DWP is supposed to top you up to reach them. Now here is the scandal that nobody talks about. Across the United Kingdom, more than 800,000 pensioner households are entitled to pension credit and are receiving absolutely nothing because they never claimed it. Many of them assume their small savings disqualify them when in fact, savings below £10,000 are ignored completely. Others have talked themselves out of it because they believe owning their home rules them out, when home ownership makes no difference at all. and a great many simply never knew the payment existed in the first place because nobody from the government ever wrote to tell them it was there. If you are a single pensioner with income below £238 a week or a couple below 363, there is a very strong chance you qualify, and a claim made before July recovers every week back to April as a single lump sum. The number to ring is in the description below this video, and that one phone call is the first step for the entire group that keeps this money. There is one more thing about pension credit that makes it the most important name on this entire list. It does not simply pay you a weekly top-up and stop there. The moment you are awarded even a single penny of pension credit, you cross an invisible line in the benefit system. And on the other side of that line sits a whole collection of further help that only opens up to people who are receiving it. A free television license once you are over 75. Help with the cost of glasses and dental treatment. The full council tax reduction we will come to in a moment. And the winter fuel payment that I will explain at the very end. Pension credit is not just a payment, it is the master key. And that is precisely why getting the claim in before the July window closes matters more for this one than for any of the others. Now, if you're finding genuine money-saving clarity here, I invite you to subscribe. This isn't about collecting numbers. It's about building a group of people who refuse to leave their hard-earned benefits unclaimed. Every subscriber strengthens this community and makes sure this knowledge reaches the people who need it most. Wherever you're watching from, take a moment to like this video. It's a simple action, but it changes lives by pushing this to someone's parent, grandparent, or neighbor. Let's carry on. Payment number 2 is attendance allowance, and this is the one where assumptions cost people the most. Attendance allowance is a tax-free weekly payment for anyone who has reached state pension age and needs help looking after themselves because of a physical or mental health condition. Around 1 million people across the country are entitled to it and claiming nothing at all, almost always because they have made one of two wrong assumptions. The first wrong assumption is that it is only for people in wheelchairs or in full-time care. That is simply not true. The conditions that qualify are far wider than most people imagine. They include severe arthritis that makes it hard to dress in the morning, problems with vision or hearing, the early stages of dementia, heart conditions, and many others. What the DWP looks at is not your diagnosis on paper, but how your condition actually affects your daily life. The second wrong assumption is that your income or savings might disqualify you. That one is also completely wrong because attendance allowance is not means tested at all. It does not matter how much you have in the bank, it does not matter whether you own your home, and it does not affect your state pension by a single penny. As of April this year, it pays £76.70 a week at the lower rate and £114.60 a week at the higher rate. That adds up to nearly £6,000 a year, entirely tax-free. The urgency here is sharper than anywhere else on this list, because attendance allowance is only backdated to the date your form arrives at the DWP. So every single week you wait is money gone for good. There is one more thing about this payment that makes claiming it even more worthwhile than the weekly amount suggests. Being awarded attendance allowance can actually increase your pension credit at the same time. The two payments are linked in the system. So a successful attendance allowance claim can lift you over the line for pension credit even if you were just below it before, or increase the pension credit you already receive. It is one of the few places in the entire benefit system where claiming one thing genuinely makes you better off on another. And yet 1 million people are leaving both of them sitting on the table untouched. Payment number 3 is council tax reduction. This is one that almost every pensioner is overpaying on without ever checking. The average council tax bill in England for this year is over £2,392, and a significant number of pensioners are paying that full amount when they should be paying far less, or in many cases nothing at all. If you receive the guarantee part of pension credit, you will almost certainly qualify to have your council tax bill reduced all the way down to zero. And even if you do not receive pension credit, if you have a low income and savings below $16,000, you will very likely qualify for at least a partial reduction. The reason so few people claim it is the same reason that runs through this entire video. Fewer than 1 in 4 eligible pensioners ever applies because the council does not check whether you are entitled. They simply send you the full bill and wait for you to pay it. And most people do, year after year. never knowing they could have paid nothing. You applied directly through your own local council, and you must specifically ask for the reduction to be backdated because the same 3-month window applies here too. Get the application in before July and April is still inside that window. There is a particular trap worth warning you about. A great many pensioners glance at the qualifying rules, decide they are probably a little bit over the line, and never bother to apply at all. The problem with that is that the reduction is not a simple yes or no based on a single figure. Your circumstances, any health conditions, whether you live alone, whether anyone else in the house counts towards the bill. All of these things shift where the line actually falls for you personally. The only way to know for certain which side of it you are on is to apply and let the council work it out. The cost of being wrong about it is paying a £2,000 bill every year that you might not have owed at all. Let me pause here and say this as plainly as I can. If you're still watching, you're part of a very small group that actually follows through on protecting their financial future. The algorithm doesn't reward this, but I do. If this information has given you even one action you know you need to take, hit the like button right now. It's a free way to bookmark this for yourself and push it into the feed of someone else who might be leaving money behind. And if you're not subscribed, join us because we are building a movement of people who get what they deserve. Now, let's look at the payment most people have never even heard of. Payment number 4 is the one that almost nobody has heard of, and it is worth over £2,500 a year. And it requires one step that feels completely backwards when you first hear it. This is for any pensioner who looks after a husband, wife, or partner who is ill or disabled at home. There is a payment called Carer's Allowance worth £81.64 a week for anyone who cares for someone for 35 hours a week or more. But here is the catch that stops most people. If your own state pension is higher than $81.64 a week, and for most pensioners it is, the DWP will not actually pay you the carer's allowance in cash because the rules do not let it sit on top of your pension. So most people apply, receive a letter back refusing the payment, and quietly close the file, assuming that is the end of the matter. And that is the exact mistake that costs them £2,500 a year. When the DWP sends that refusal letter, what it is actually doing is confirming something called underlying entitlement. That is a legal status that says you meet every single condition for the payment, even though the cash overlap means they will not hand it to you directly. That confirmation of underlying entitlement is the key because it unlocks an extra amount added on top of your pension credit called the Carer Edition, worth £45.85 a week. Across the year, that adds up to over £2,500. The people who never apply because they assume there is no point never receive that refusal letter. And without the letter, the £2,500 never arrives. The counterintuitive truth here is that you have to apply for the thing you will be refused precisely so that the refusal can unlock the thing that actually pays. Payment number 5 is about your state pension itself, and a letter that HMRC is sending out this July that you genuinely cannot afford to ignore. The full new state pension is £241.30 a week, but most pensioners receive less than that, and most have no idea why. The answer is almost always gaps in your national insurance record. You need 35 qualifying years of contributions to receive the full amount. And if you have fewer than that, your payment is permanently lower for the rest of your life. Now here is the part that connects to July specifically. HMRC is sending letters to people who have been making voluntary contributions to fill those gaps. Those letters describe changes to how the arrangements work going forward. If one of those letters lands on your doormat, do not put it to one side and forget about it. Missing the deadline inside it could mean losing qualifying years that you have already paid for with your own money. And for everyone else, June and July are the ideal time to check your own national insurance record through your personal tax account on the government website. If you find gaps, filling them costs somewhere between £900 and £960 for each missing year. And each year you fill adds roughly £358 to your state pension every single year for the rest of your life. And because of the triple lock, that higher base then rises every year on top. So the value of filling a gap now compounds for as long as you live. Let me put that into plain figures for a moment because it is genuinely one of the best returns available to anyone in retirement. You pay somewhere around £900 once. In return, you receive an extra £358 a year for life. If you live another 10 years, that one payment of £900 has turned into more than £3,500 coming back to you. And that is before the triple lock increases are added on top each year. The one warning I will give is that not everybody benefits from filling gaps. If you are already on track for the full pension through other years, paying for more would be money wasted. That is exactly why the step is to check your record and confirm it would actually increase your payment before you part with a single pound. So now let me bring all 5 of these together, because this is the moment where you find out which group you are actually in. Picture the pensioners watching this split into 2 groups. There is the group that hears all of this, recognizes themselves in one or more of these 5 payments, picks up the phone or fills in the form before the first week of July, and captures everything. Every backdated week from April, every pound they were owed. And then there is the much larger group, the one that nods along, agrees it sounds important, decides to deal with it later, and lets the July window slide past. That second group does not lose everything all at once. They lose it quietly, a week at a time, as April and then May drop out of the backdating window, and the money that was sitting there with their name on it simply evaporates. Only one group keeps this money, and the only difference between the 2 groups is whether you act inside the window or after it. I want you to be honest with yourself for a moment about which of those 2 groups you have been in your whole life. The uncomfortable truth is that most people are in the second group, not through laziness, but through a very reasonable assumption. The assumption that if the government owed them money, somebody would surely have written to tell them. That assumption is the single most expensive mistake in British retirement. And it is expensive precisely because it feels so sensible. The whole system is built on the quiet understanding that the money only moves when you ask for it, and that if you never ask, it simply stays where it is. No letter will ever arrive to tell you about it. There is no knock at the door from somebody wanting to hand you what you are owed. The only person in the entire arrangement who is ever going to start the process is you. And the only window in which starting it recovers the full amount is the one that closes at the beginning of July. Think for a moment about how the system would look if it worked the other way round. If the DWP wrote to every pensioner each year, setting out precisely what they were entitled to and inviting them to claim it, the amount of money flowing out of the public purse would be vastly higher than it is today. And that is exactly why the system has never been built that way. It is not an accident that 800,000 households are missing out on pension credit. That figure is the predictable result of a system that pays only those who know to ask and stays silent towards everyone else. And here is the connection that makes acting this month more valuable than at any other time of year. The 6th payment I promised you at the start. Everyone who successfully claims pension credit before the qualifying date this autumn is automatically placed in line for the winter fuel payment, arriving in your account in November or December. That is £200 for those born between 1946 and 1960, and £300 for those born before 1946. Landing automatically with no separate application, simply because you got your pension credit claim in on time. So one single phone call about pension credit this month does not just recover your backdated payments going right back to April. It can reduce your council tax bill at the same time, and it puts a winter fuel payment into your account this coming winter. All from that one action. The DWP will never join these dots for you. They will never write to tell you that one claim unlocks 3 separate streams of money. And that, more than anything else, is the single reason that millions of pensioners across this country are sitting on money they are fully entitled to and receiving none of it. So let me be very clear about what the group that keeps this money actually does this week, because none of it is complicated. Anyone on a low income should ring the pension credit line. The number for that is sitting in the description below, ready to be called today. Where you or your partner has any health condition that makes daily life harder, the move is to ask for the attendance allowance form. Those of you paying a full council tax bill need to contact your local council and ask specifically about a reduction with backdating applied. Anyone caring for an ill or disabled partner should apply for carer's allowance, even while expecting to be refused, because the refusal is the very thing that pays. And every single person watching ought to check their national insurance record on the government website and keep an eye on the doormat for that HMRC letter landing in July. Every one of those actions has a backdating clock attached to it, and every one of those clocks is ticking down towards the first week of July. The pensioners who act inside that window keep everything. The ones who wait until August begin to lose it quietly, week by week, until it is gone. I have spent years watching good, honest people miss out on money they were fully entitled to, not because they did anything wrong, but because nobody ever sat them down and explained in plain English that the money was there and the clock was running. You now know more about these 5 payments than the vast majority of pensioners in this country will ever be told. The only thing that stands between you and the group that keeps this money is whether you act on it before the window closes. And I want to leave you with one last thought, because it is the thing I most want you to carry away from the next few minutes. Every single one of these 5 payments has been sitting there fully available for the entire time you have been retired. None of this is new. Not one part of it is a loophole or a trick or something that might be taken away if too many people find out. It is money the system was designed to pay you that simply does not move until you reach out and start it moving. The pensioners who end up in the group that keeps all of this are not cleverer than anyone else, and they are not luckier. They are simply the ones who heard that the clock was running and decided to act before the first week of July rather than after it. That is the entire difference. And it has nothing to do with how clever you are, how much you earn, or how lucky you happen to be. It comes down to the single decision to pick up the phone while the window is still open. If this was useful, pass it on to someone who needs to hear it. Hit subscribe and stay close. There is more coming your way. I'll see you in the next one.